So you've got a major shock on Wall Street and, at the same time, a huge panic in the Bitcoin market. On the surface, these two events look completely unrelated, right? Well, they're not. They're actually being driven by the exact same fear. And if you can understand that fear, you can understand a whole lot about where the market is really headed. Okay, let's break this down. On one side, we have Blue Owl Capital, a huge player in private credit, sending these waves of fear through institutional investors. Then, on the other side, you have headlines coming out of Korea talking about a massive retail panic in Bitcoin. We're talking two totally different worlds, different assets, different kinds of investors. So why on earth are they acting the exact same way at the exact same time?
Now, the easy answer, the obvious one, is that bad news just makes people panic and sell. And sure, that's true to an extent, but it's a lazy explanation. It completely misses the most important part of the story, the part that actually has an impact on your portfolio.
What's really going on here isn't just about prices going down. It's about something much deeper. It's a fundamental shift in investor psychology, a change in what people actually want from their money. It's a crisis of confidence, for sure, but probably not in the way you're thinking. So it all comes down to this one key concept: liquidity preference. This is where the whole game changes. Investors suddenly stop asking, how much money can this asset make me? And they start asking a totally different question. How fast can I get out if I have to? All of a sudden, mobility and flexibility are worth more than the potential for profit. Here's a good way to think about it. Imagine you're in a crowded theater. The building isn't on fire, the exits are all wide open, but for some reason, everyone starts staring at the exact same door. The fear of being trapped, of not being able to get out when you want to, is enough to cause a stampede all by itself. That's the feeling that's driving both Wall Street and crypto right now. All right, so let's see how this fear is actually playing out. We're going to go back to our two examples, private credit and Bitcoin, but this time we're going to look at them through this lens, this intense, frantic hunt for an exit. So in Blue Owl's case, the firm sold a bunch of its assets for 99.7 cents on the dollar. I mean, that sounds fantastic, right? They're basically saying their valuations are solid, but the market didn't care. Investors panicked anyway. The fear wasn't about the loans being bad, it was about the structure. It was the fear that their money was stuck in these slow, hard-to-understand assets right when they wanted speed and cash. That's a classic confidence leak. Now, what's so fascinating is that the Bitcoin story looks like a complete mirror image of this. The headlines were all screaming retail panic, but when you actually dig into the data, you see something much more deliberate, much more calculated happening. It's not just a blind sell-off. And this number tells you everything you need to know. Nearly $250 million flowed into stablecoins, which are basically the crypto world's version of cash, in just 1 week. Think about that. That's not capitulation, that's investors making a strategic decision to move into parking mode. They're not leaving the theater. They're just moving to stand right next to the exit, waiting to see what happens. This table just lays it out so clearly. In the slow, murky world of private credit, the fear is my money is trapped. But in the super fast 24/7 world of crypto, the system's speed itself becomes the exit. Its biggest strength, its liquidity, turns into a pressure release valve when fear spikes. So you have two totally different systems, but one single fear-driving behavior: get me to cash. Now, this kind of chaotic, confusing environment where everyone is just looking for the door is the perfect breeding ground for extreme ideas. It's exactly the kind of situation where a really simple, really powerful story can cut through all that noise.
And that's where this viral quote from Michael Saylor comes in. It sounds like just another wild price prediction, doesn't it? But its purpose is actually much deeper. In a market that feels like it's drowning in complexity and fear, this quote offers a lifeline of pure, simple clarity. It's what you might call a narrative compression device. It takes all the anxiety, all the charts, all the uncertainty, and just squeezes it down into a simple binary choice. It's either going to be a total failure or it's going to be an astronomical success. It's psychologically powerful because it gives people a simple story to grab onto when nothing else makes any sense. And this need for simplicity really helps us understand how market sentiment breaks down, and it tends to happen in stages. First, investors get cautious. They stop taking new risks. Then they move into that parking mode we talked about, hiding in cash or things like stablecoins. And finally, the only things that can attract any money are the assets that have the simplest, most powerful stories. So look, maybe you don't own a private credit fund, and maybe you don't own any Bitcoin. You might be thinking, why does this matter to me? Well, this shift in behavior
absolutely matters, because this dash for cash has consequences that ripple out and affect the entire economy. When the biggest pools of money in the world decide they only want things they can sell tomorrow, they stop making long-term bets. That means less funding for startups, tighter lending for businesses, and more pressure on everything from your stock portfolio to your retirement account. This hunt for liquidity doesn't stay in one place. It leaks everywhere. And that leaves us right here with the one critical question that's going to define the market moving forward. We have billions upon billions of dollars just sitting there, parked on the sidelines, waiting for a signal. The money is there, but the conviction isn't. So the question I'll leave you with is this. What catalyst, what story is going to be powerful enough to make all that money come stampeding back into the theater?